Here's what every business owner should be doing in July. So if you follow these stories, we're talking a bit of an advice piece on what business owners should be doing throughout the year. We're assuming this is the end of your first quarter. And on that basis, you typically have a VAT return to prepare. The VAT review process is really key. As accountants, our pure aim is to optimise the VAT that you recover, making sure you pay the minimum amount for your business and you're recovering all that VAT suffered on costs, and from VATs you're charging your client, making sure you're charging the right clients the right amount. The Gravitech Accounting, the VAT review process is 3 parts. So the first stage is a team review. One of our accountants will prepare a tax return and they will do a detailed review. They will agree the VAT amount per the return to your balance sheet. They will agree the turnover, the turnover shown in your VAT return. They'll go through every transaction and make sure we're optimising that VAT recovery. Step 2, we would then use some technology. What we do, we get the tech to run a review of all the transactions. So our accountants are great, but there's thousands and thousands of transactions, bits can easily be missed. And what the technology does, it will review every line and it will say, okay, why is this transaction coded to telephone and this transaction coded to fixed assets? Because every other time you bought from EE, for example, it's always gone to telephone. It's just flagging those errors for us. And it might make sense. It might be that we bought a mobile phone direct from EE. So in that scenario, it makes sense. But in some scenarios, it helps pick out errors and make sure they're corrected. Another example where the software is great, in that same scenario, we might have 11 transactions from EE where we've recovered VAT, and on the 12th transaction we haven't. So the software is flagging and saying, okay, is that right or wrong? And it might be that we're missing an invoice, so we haven't recovered the VAT. And again, that encourages us to have great conversations with our clients to help us recover as much VAT as possible. So we've had the human check, then we've had the IT check, the data check from one of our software partners, and then finally we have a final review from the team member. And again, we're bringing in the human side, the people side, having those conversations, that knowledge of the clients, whilst also bringing in the tech and the use of AI to optimise that recovery when it comes to VAT. Another thing that can change throughout the year when considering your VAT position is, are you on the correct VAT scheme? So there is a number of VAT schemes. Different schemes are suitable to different businesses. The main options are standard VAT scheme, which is typically on an accruals basis. So you will pay and recover VAT based on when the invoice is raised. That isn't suitable for every business. Sometimes we use a cash scheme. This is more suitable if you have long payment terms. And in this scenario, instead of suffering the VAT on invoice, you'll suffer it when you get paid. So you might raise an invoice for £10,000, which has got £2,000 worth of VAT on. And if you raise that at the end of a quarter, on the accrual scheme, that is when you'd pay the VAT over on that current return. But if you're on the cash scheme, it wouldn't be until you get paid. So if that isn't paid for 2 or 3 months, the likelihood is it's going to fall into the next VAT return or the one after that. We also have the flat rate scheme, which is one of the more simpler schemes to administer from an accounts perspective, so quite favourable for new businesses. We also have the annual accounting scheme, but the key thing here is VAT isn't one simple answer. There's many different schemes to consider. Again, as part of your quarterly review, you need to consider, are you on the best scheme for you and your business? Some of the VAT schemes you choose to be on are a choice for you as a business owner, but some are based on thresholds. So it's also key to monitor those thresholds and levels of turnover your business has to make sure you still qualify for a specific scheme. It's not everyone's favourite topic, but it is key to be reviewing this process, making sure you're optimising that VAT, making sure you're on the right scheme, and making sure you're compliant with HMRC. Because as we all know, the VAT man is a scary person.